Greetings guys, I welcome you in this beautiful video. So in this video I'm going to be showing you guys how to scalp using Fibonacci retracement. So this was a video suggestion by Malibonga, says how to scalp using Fibonacci retracement. So I'm going to do a video. So if you also have a suggestion on which video I should make next, just comment below, drop your comment, just tell me which topic you want me to address, and I will do as you say. So I'm going to address this situation in two scenarios, where it's an uptrend and where it's a downtrend. So we are learning on how to scalp using Fibonacci retracement. So this is Fibonacci retracement. I hope you know about this tool. So if you don't know about it, just comment below and I will make a video teaching about the Fibonacci tools. So now what you need to know, because this tool here, it is a tool which is used to determine an entry, or it is a tool which is used to determine a retracement. As its name says, it's Fibonacci retracement. So it is used to determine where prices will retrace. For an example, where a corrective wave is ending. So remember that when we are trading as traders, we are looking for entries when price is correcting, and we should be in the trade when price is moving in an impulsive wave. So this tool, it is here to tell you the end of this corrective wave or the beginning of this impulsive wave. So that's the purpose of this tool. So now if this tool is going to show you the beginning and the end of the waves, then you need a tool that is going to show you on which side is the market going. Is it going up or is it going down? So if you are not able to determine the market with your eyes, that's where maybe you're going to use something like a moving average. I've put that in your case. If you don't know how to analyze using your eyes, to see the direction using your eyes, it is good that you put on the moving average, which is a 200 period. So once you have put on your moving average, then that's where things are now very, very simple, because now the only thing that you are left with, it is just to place your Fibonacci. You know what the moving average does. It tells you that simply when price is flowing above the moving average, it's simply an uptrend, and when price is floating below, it's simply a downtrend. So when you see price moving above the moving average, you need to know that, okay, it's an uptrend. And if it's an uptrend, we are looking forward to buy. And if we are looking forward to buy, then it means that when we are using our Fibonacci retracement here, it means that we are going to be dragging it from down going up, because we are looking for the end of the corrective wave or the beginning of the new impulsive wave. So that's the story. So if it's an uptrend, when you put your Fibonacci, you place it down and you drag it up. But if it's a downtrend, you place it up and then you drag it down. So that's the difference. So where do you place it and where do you drag it? I'm just going to address this for those who have forgotten or for those who don't know. Simply, when it's an uptrend, you just look for your previous low. I will not make an example of this chart. I will make an example when I'm showing you the entries, but for now I will just do a sketch here. Let's say the price is moving like this. It is moving in an uptrend. So what you need to place this tool, firstly you need your previous low, which is this one, and then you need your most recent high, which is this one that has just formed. Remember, we are looking for the next low, which is not known. So once you have seen your recent low and your previous low and your most recent high, that's where you take your Fibonacci retracement, you place it here on your previous low and you drag it to your most recent high like this, and then you extend it all the way to the horizontal side, just like this. And then you will wait for your price to come down here in these key points here, which is the 38 and the 50% and then the 61. So these three here, they are marked as 0.38, 0.5, 0.61. but you can also call them in terms of percentages like 38.2, 50%, 61.8. So when they come here, when the price come here, that's where you are looking for signs of a beginning of an impulsive wave. And when it does like this, that's where you press your buy button. So let's get into the chart. So here we have seen price going up. We can see price going up. The most important thing, guys, here, it is to make sure that you see when this wave is in formation, the corrective waves. Make sure that you spot when these waves are in formation. For an example, here, the only proof that it was now correcting, it was around here, where it formed this high, which is lower than the previous one. So this lower high here, it is a sign that it's a corrective wave. So once you spot this high, let's say the market is here, then that's where you go to your Fibonacci and you look at your previous low. Here is the previous significant low. I place it here and I go to my most recent high and I place it there, and then I extend it just like that. And then now I am waiting for price to do something here. So when price approaches this level, you see that it reacted even with a long wick, which shows that there was the sellers were rejected here. So it reacted, it went up, and then now it was a confirmation that you can enter this market because it went up. So that's whereby you consider it, because there is also leverage from the uptrend that the market is moving up, and the key level, it is these three levels here, the 38, the 50, and the 61. So when it bounces here, that's where you enter your trade. Same thing applies to the next important scenario here. Your role, it is to identify when the corrective is in formation. Where was the corrective clear now? It was somewhere here when it began to form these highs, which are lower than the previous one, and these lows going down, which are lower than this previous one here. So it was a sign of a corrective wave. That's where you drag, you place your Fibonacci to your previous low, and you drag it to your most recent high, and then you extend it like this, and then price is going to react here. When it reacts here, that's where you enter your trade. So make sure that you also consider all those entry strategies that I teach. For an example, pattern breaks. For an example, here there is a pattern break and a retest, which is a clear confirmation of saying now you can buy without fear. So I hope that is making sense. So let me just go to a downtrend and let's see what we will find there. So now here we have the market moving down. So we have the market moving down. I'll make an example of this wave here. I will not consider this. So because if you can see this is now a sign of buyers coming in, because we have a low which is higher than the previous one. So it means that the sellers, this was their last push. But let's say, how do you get this last push? That's where you see that, okay, prices begin to flow below the moving average, which means it's now a downtrend, and I'm looking for shorting opportunities. So I take my Fibonacci and I look for my previous high. Now it is no longer lows, it is previous high, and then I go to the most recent low, and then I extend. So I wait for price to approach my key levels. It approached and it bounced all the way down. And then if you are cautious, you can wait for a proof, which was a pattern break somewhere down here, and you sell all the way down here. So I hope it is making sense. This is how you should apply Fibonacci when you are scalping. Just have something to show you the direction. If you can spot it with your eyes, and then just place and drag the Fibonacci, and then wait for a confirmation, and then you are good to go. So if this video was helpful, remember to comment below, like this video, you can share it if you don't mind. So thank you for watching this video. I wish you all the best in trading. This is Pti Forex. Thank you.